Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, fantastic mustache, lessons I've learned, things that helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today, guys, I want to talk through the Houston market. It is one of the top 5, 3, 4, 5, whatever it is, largest cities in the country. And I hear so many new investors or people that are maybe buying into Houston, new to the Houston market, ask, where should I invest? I talk to a lot of out-of-state people that become clients, California investors moving to Texas or investing in Texas. People from all over the country want to invest in this market. And I always get the question of, where's the best place to invest? So I want to take a minute on this video and just talk through the best places to invest in Houston, if there is such a thing. So I'll go through that real quick. If you guys are familiar with the market, you're going to understand, you'll know these areas very well. If you're not very familiar, write them down. You can Google it and look through everything. So if you're new, first property, is there a best market? So I would step back before you even decide what's the best area, what's the best market. If you're looking between maybe Houston and Austin and you're investing out of state, there are going to be deals that are going to be fantastic for me that are going to make absolutely no sense for you. What are your goals? My goal when I started was to build up enough passive income from rental properties. We all know it's not really passive, so that I could leave my job, or when the time came, oil was going like this, that I knew I wanted to step away and I didn't want to be tied to that job and be, I didn't want to be worried about work. I wanted to be able to make a transition when need be. So I was buying a little bit more for cash flow. Some people, hey, I want to be able to take care of my kids' education. So I want to buy a property, put it on a 15-year mortgage, and in 15 years, or when the kid turns 15, 16, 17, 18, it'll be paid off. And that'll be the decision. We can do a cash out refinance, let them manage it and run it into the ground, or let that be kind of their college funding. Some people are like, hey, I do philanthropic work. I make $30,000, $40,000, $50,000 a year, and I'm trying to save some money. But man, if I can buy a property every 2, 3 years, in 10, 15, 20 years, that'll be my retirement. So, but I love what I do. So they don't want to leave their job. So these are different strategies. And you hear a lot of the big guys talk about as well, like the Grant Cardones of the world, the David Greens, Brandon Turn. These guys are buying huge investments, tens of millions or hundreds of millions of dollars. So their criteria is different. Stuff that makes sense for you and me is probably way too small. They don't even want to mess with it. They can't make enough money on 2 or 3 houses to make it worthwhile. They have to buy complexes or blocks and blocks of property or commercial. So their return might be totally different. They might be totally happy with an 8, 9, 10% return. Whereas we want, hey, if I'm going to do this, I want to get above what I'm going to get in the stock market at 10%. So when you guys are looking what market to invest in, step back and ask yourself, what am I trying to accomplish? That's kind of the first piece. So what is my goal? Then you work backwards from that. So if you do look to Houston, and I think Houston is very versatile. Back in the day, Houston was just an oil town. There was the majority of people here worked in the oil and gas business. Now you have medical. You have an incredible service industry, which was hit really hard during COVID. Obviously oil and gas, but oil and gas companies are now diversifying into solar and other renewable energy. So they're becoming energy companies, not oil and gas companies. So those companies now are pivoting. And there's just so much opportunity here with the shipping channel and everything, all the goods and services that come into this city. It's growing, and it's amazing on the versatility and the diversity throughout Houston. And I invest outside of Houston. I invest back in my hometown as well. So I'm not saying Houston's the end all be all, but if you're looking in Houston specifically, I want to give you guys some answers. When somebody says, should I invest in the Houston market? Well, like any city, there's stuff downtown, Heights, Edo. Some of the places a little closer to Edo, Spring Branch area. There's some of these places, Montrose, that have almost little to no cash flow, maybe negative cash flow. but they appreciate very, very well. You have some areas that are transitioning. Some of the areas outside of Edo are always big in transition. Some areas south Houston, those are transitioning areas. So your cash flow is going to be a little bit more, but you're really banking on this is kind of the next wave. There's a bunch of things moving this way. Another one of those is just above the Heights. You have Independence Heights, which is a huge area where a lot of growth is pushing from the Houston Heights, because again, you're $500,000, $700,000 for a house, a couple $100,000 just for a lot, and they're moving north. Now it's transitioning, so there's a dump next to a new build, but if you can hold, your appreciation is going to really help out over time. So those are a couple, and then you get out a little bit further in the suburbs where you have a little bit nicer properties. You have a little bit more land, a little bit more space, a little cheaper prices. You know, you can still get something for $250,000, $300,000 that might not cash flow a lot, $300, $400, $500, but it might depend upon your down payment. You know, you're going to get some cash flow out in the suburbs. Now, what are those? Katy. I'm fond of Katy. I lived in Katy. I like Katy. But even in Katy, you have North Katy, that is a little bit cheaper properties. You have South Katy, which are a little bit nicer properties. You know, you probably get the 200, 250 range up north, and then in south, you're going to hit, that 300 to 400 range. Then you go up a little bit further north and you have Cypress. This is another great area for buying property. And then you kind of keep going further around the clock, and you get north to Spring. Conroe, ISD, Spring ISD up there, Klein. Those are all great markets. And now there are pockets in each of those, right? You got to make sure that you still want to understand, just because you buy in one of those suburbs doesn't mean the property is going to be fantastic. You're still got to do your due diligence, make sure you're not next to, a busy street and some of the other little odds and ends that people like. The house still makes sense functionally. I do not like 1-bathroom units, just FYI, those are difficult to rent. 2-bathroom or at least a bath and a half. But why do I like these that kind of compass the 9 o'clock to 12 o'clock? If you're looking at Houston on a map, it's kind of the 9 to 12. They have great school districts. So there's people moving there. They're putting money in to those areas. When I came here and moved to Houston in 2013, Katy was still growing. And I can't even remember how many thousands of people they were adding to Katy each day. But that number has really slowed down a little bit, but it's still people moving to the area. When you live downtown as a young professional, you got the nightlife, you're close. And then when you start having a family, you push your way out west. And it's slower. You've got a little yard for your family. You now care about the school district. If you stay in close, you're in that Spring Branch area, that's expensive. There's, $700,000, $800,000, $900,000, $1 million homes all up and down there. Some of those areas are great schools. Some of them are not. So if you move a little bit further west, it's a lot more affordable for people. And all those areas, like I said, you can even get down into Sugarland, Katy, Cypress, Spring, Klein, and then you go way far north to Conroe. Those are the areas going to be a little bit more for cash flow. Now, if you want to talk about even further outside of Houston, which at the time of this recording in 2022, as interest rates continue to rise, it's less desirable, further away from town. Some of these properties that we might have been picking up, or as an investor, you might have been picking up for, 50 to 100,000, an hour from downtown. Those are becoming harder and harder to rent. People don't have as much disposable income, and you have these properties that are way outside of town, and people might have to commute somewhere, or they're further away, and it's a little bit harder to justify some of those investments. They're not going to see the appreciation. So Texas City, Lamarck, Baytown, those are some of the other areas that are a little bit further outside of town. You even go up northeast into New Caney, Kingwood, Dayton area on the northeast side of town. But those properties are further away from Houston, a little bit more blue collar workers, better cash flow, but you're way outside kind of the city. So understand that market's probably not going to see as much appreciation, but you are going to see a lot better cash flow. Now, clientele are different, rents are cheaper, an AC unit costs $5,000, whether it goes into a $200,000 house or $2 million home, right? That same 3-ton system costs the same. So understand that from a CapEx perspective. That is really broken down into Houston. I wanted to do this because I think there's been a lot of people ask about this. So to summarize really quickly, find out what your goal is. Is it appreciation? Is it cash flow? What are you, and even back up further than that, what do you want to achieve and what's your timeline? You know, if you want to leave your job in a year, probably not going to be able to do it with real estate. But if you want to leave in 5 or 10 years, start, have a plan together and you can work that plan. But if you're looking down further down the road, then you understand that you're going to invest a little bit differently. And then I just gave you a real high level synopsis of the areas in Houston to invest. So you guys know, closer to downtown, more expensive, less cash flow, better appreciation. The further you go out, better cash flow, moderate appreciation. And then when you go really far out, better cash flow and, marginal appreciation. So I hope that was helpful. If it was, let me know. If it wasn't, let me know. I think that, for y'all investing out of state in Houston, it's a great market. We love it. Seen a lot of people moving here. It's just, you can't just say I invest in Houston. I'm just going to invest in Houston. There's so many different areas and different goals. The properties are going to bring you different things for each of these different markets. So I hope you understand. I hope I was able to convey that. I appreciate y'all, and I'll see y'all next week.